Now let's talk about Friday. I want to spend this week's training focused on Friday because firstly, it's a very big day, right? And you don't always see this. So I want to, teach you how to prepare for days like that, show you how to be taking trades on days like that, not just technically, but also psychologically, emotionally, how you should handle for days like that. Now let's take a look at the start of the day. Now, very importantly, there were several things about the start of the day that I was mentioning about, right? Because firstly, I mentioned several times not to go long until the cups close. Let's see, where was it? Here, right. Yeah. Wait for cups to close because there just isn't any liquidity that's being built by the bulls. Let me show you from the start of the day. Right, so firstly, on the start, we identified this stronger green buying algorithm. That's great because this will help us with any breakout in the day. And then we had that pink that started building liquidity early here. But that green didn't break out because we started tapering at the magenta. And that's when we already have identified this magenta algorithm here. Now this becomes very important because I want you to see how the magenta was just building liquidity throughout the time after 10 o'clock, this tapering here. When you don't see the bulls building liquidity, bullish control, and this has happened many times, right? If you were watching the training videos, if you were following along the Discord analysis, I often mention that if there is no structure, no trade, exactly as it is. If you do not see any structure to go long, fair enough. There will be one or two instances where this just grinds up or it starts to burst up without showing some bullish control. But in instances like that, if it doesn't show, you see for yourself how prepared you can be just because you know that there is no bullish control algorithm here. So even though we saw pink building liquidity here, isn't it? Right? Pink, yeah. We saw pink building liquidity. You cannot go long here until I see perhaps a head that's built, something like that. Or, as I mentioned, you wait for the cups to close, you choke up the sellers here. Because as I always say, if we do not close the cups, the bear flag can be still in effect, or the tapering in this case because of the magenta. Now, magenta has shown us many glimpses of its presence here. Right, so we had the magenta liquidity right here, which started grabbing it first, right? And we started building more magenta liquidity throughout this entire range here. So the tapering was quite obvious. And therefore, I actually took a quick zombie trade at 948. Where was it? 948. Yeah, right at the top here. I took a zombie trade here, right? Because I saw that the return from the orange, this is not new to you, right? From green to orange and back to magenta. So I saw this, I saw the liquidity here, wanting to grab it, and it went all the way down right there. Now, usually this is a $10 profits per, which is a 1 point trade, right? Now, usually I would take, if I took 10 contracts here, that will be $10,000 profits. So I don't have to take too many. Sometimes I take 20. But if it's deep in the money, I usually just take 10. So this would have been a 5-figure trade right there. That's all I need for the day. But obviously I was trading lightly then. You would see it for yourself later. So this was just about 3,000. That's good enough for me. If I'm trading lightly, I caught a good trade here. That's about it. So I want you to understand what to be looking out for here. Lack of buying continuation structure. which led to tapering of the 3 tapering algorithms that we already identified in the morning, giving us that beautiful head and shoulder pattern here in that microstructure here, right? Retesting it at the magenta, already closed for profits then. 1016, in fact, I held it all the way here, right? That's fine because you see magenta just building liquidity on the way down. You see the dual algorithms here as well, right? So the follow through from this will be the magenta here, building more liquidity on the way down. You see it happening. Dual algorithms here, isn't it? You saw it for yourself again. Nested right shoulder here on the magenta, right? So it takes a little practice, but once you see it, you cannot unsee it, right? So some of you are able to identify the algorithms and the structure on a larger scale. But if you're trading early candles, you need to be looking out for truly the microstructure like that. It's much clearer when I show you like that on hindsight. But your challenge is to be able to identify it, appreciate it. So study every day, review every day. You see me take early candle trades precisely from very microstructures like that, right? This helps because there's also the pink algorithm that's controlling the top range. So it works out to be a good zombie trade as well, right? So understanding where my risk and rewards are, understanding the structure that followed together with this. So it's absolutely beautiful trade. On a usual day, this will be my 5-figure trade here. 10 contracts, $10 profits, which works out to be $1,000 profits per contract. So this would be my 5-figure trade right there on a usual day. So you saw the pink building liquidity here, and it's important, right? You pay close attention to this. So at this point here, instead of thinking of calling for the reversal, right? Calling for the way up, it's indeed beautiful liquidity. It is, right? Don't be mistaken. But you have to be truly very careful about this, understanding this. This would have been great. Now, there is a reason why I didn't ask you to go long here. And I was just reminding you. Let's see. 1119. I was just reminding you about being very careful about going long, right? Let's see. Yeah. You have to understand why I mentioned this. Because firstly, the inverse cup has closed, right? So this is important. We closed the inverse cup here. You see it for yourself, right? So we closed inverse cup. There was clear tapering, right? And you see magenta just building liquidity for a beautiful handle here. We had the zombie. Now it wedged. To be fair, it wedged with the magenta and the pink. But you do not see the bulls building liquidity. The only time I can see that the pink was building liquidity was here. This would have been a fair trade here. This would have been a fair trade. But I would not have overstayed here because if you see the green was trying to build up here, right? So let me show you this again in a tighter context and how to be managing this. Now say, I just saw this here, right? Liquidity here from the pink. Market tried to grab it, but failed, right? Rebuilt more liquidity here together with the teal. So this is valid. I think this is a valid structure here. And try to push out here, right? Now, there is a main liquidity here that's not grabbed, right? You'll notice we didn't grab this liquidity here. And so when this green precision algorithm showed, right, trying to grab this liquidity here, I would have expected it to do this if I wanted to go long. You notice, because we have not grabbed this liquidity in time, even though we had this. So when this happens, now preferably the green shows, we break out, retraced, continue to head up, close the cup, try to grab this liquidity here with the pink and the teal algorithm, right? This would be ideal because this liquidity is not being grabbed. We had a strong green buying from that nested head and shoulder pattern here with that pink. but it died down. It didn't even break this initial pink. So that showed me that the buyers are not in control. And there is another context to this which was quite important, because I mentioned here that the inverse cup has closed here, 1019, right? So you have to see also the inverse cup closing, right? We got magenta at the top. Magenta was already showing some strength here. You notice this, we lacked that buying continuation at the start. This was why I took my puts here. And we were just waiting for the structure to form. Now, so this is a very important lesson, as I always mention to you. Until cups close, right, the bear flag is still in control. The same for the reverse. Unless inverse cups close, the bull flag is still in control. So you notice magenta was always in control here. And so when we wedged here, we lacked buying continuation. Now this was when you possibly can short this from here. Now if you missed this, that's fine. If you watch my Sunday videos on YouTube, if you missed this, absolutely fine. I will show you how you still can be making a lot more money from this. And so I took my puts from that. It was a continuation trade, right? So all my trades here. 1025 I reloaded. Yeah. The head, isn't it? I reloaded here near to where the pink algorithm is, right? So once it broke below, back down to that magenta and pink, I reloaded here. I protected it sufficiently and I got in position. So it's important you understand how to get into position. This is important. You need to learn how to get in position. 1045 again, right? It's easy for me to take a trade here. It's easy for me to take a trade here because I've already protected all my runners here. Right, so getting involved, it's very important skill. You need to learn the skill of getting involved, getting into position. So as you get better, start just taking one trade for that one direction. You notice how I got into position so that I can get the, better room for more margin for error in order for the larger move down. You see that happening, especially when we are at the top of the range, right? We're at the top of the range. And, well, frankly speaking, I was also mentioning to you about this blue liquidity, isn't it? I talked about that in the early hours here. I talked about the unfinished business here. Right, I talked about that. Number 2, unfinished business at the blue algorithm liquidity from Thursday. Right, so we saw that. We saw this unfinished liquidity that was formed. And so we probably wanted it to grab the liquidity all the way down. Right, you remember that blue algorithm here. So waiting for cup close, as I mentioned, right? And you saw the cup closing at the 5-day, which I will show you here. This cup close at the 5-day. Right here. It's a larger cup close, that's fine, because you're talking about the larger time frame here with the initial blue liquidity here where the 5-day moving average is. Right, so not the intraday cup close, but from the blue algorithm here. You understand that? Yep, from the blue algorithm here. I can zoom this in. I just found out. Okay. So, now emotionally, you must be, if you're prepared and trained and disciplined enough to find profits in the charts every single day for the rest of your life, you will not be floundered by moves like that, right? You will not be rattled by this. In fact, you will stay focused because you know that I want to run through a thought experiment with you, as always. When this large candle happened, 2 things must come to your mind. The first is it going up or down, and how do I tell? So we identified the magenta, bringing it down, right? We already saw the magenta building liquidity down. So if this wants to continue heading down, you wait for the magenta and the orange to build liquidity. right? So that's the first experiment, your first thought in your mind. I can afford to wait, especially with the 5-day, providing me some confirmation as resistance. So this was what I mentioned here as well. After the big dump, you can be absolutely patient. Wait for the 5-day, right? Where was it? Yeah. Now this was already 20-day, 5-day here. Right here. Wait for 5-day to turn into some sort of resistance. Now, easy, isn't it? That's your first thought. So you can afford to wait instead of chasing this. Now, the second thought will be, if this wants to head up, I see beautiful pink liquidity, and I have to get ready. If this wants to head up, firstly, you may see some very clear structure of that 5-day moving average here, and you see the pink algorithm rejecting it penny perfect. So maybe like that, and then thereafter grabbing the liquidity on the way up here like that. So you see already, you know where to manage your next 5-figure trade after this dump here. And so if you do this every day, if you have the skills, if you have the know-how to be looking for profits, this doesn't rattle you. In fact, this should excite you, because this is the market telling me that it has created a 6-point imbalance within literally minutes. And that means there is going to be big volatility. There's going to be big moves, especially on Friday. And it's going to be triggering stops. Volume is going to increase. And as you see for the rest of the day, the volume is significantly higher than the start of the day. And that tells me that there is going to be action. I just have to stay focused on what I know and what to be looking out for. And as I mentioned on Sunday's video, this dump here, which you may or may not catch it. Now, you could have caught it if you got in position like I did, or you were taking a zombie trade based on this pink algorithm. Either way, it's a good trade, right? If you're taking a zombie here, if you're taking an upper Bollinger hedge, if you're taking a expected range hedge, as I was talking about, right? This was from last Sunday's video. Many reasons to be taking this trade, but if you miss this, this is only 6 points. And as I've shown you, for the rest of the day, there was another 13 points, twice of this. So you could still be making absolute killing if you remained focused. And I just want you to see for yourself for the rest of the day. Right, once we had that dump, this becomes easy. The blue seller. Another clue here, right? I talked about that. How the blue seller just showed up. So there are insider traders, obviously. 100% there is. You just have to get used to it, right? We saw a glimpse of that blue, which turned out to be very useful later because you saw the blue starting to sell on the way down, breaking that structure here. The 5-day structure was a little thin, but it's still a viable structure regardless because of the presence of that blue. So once this blue appeared, it became very straightforward to grab that all the way down, right, together with the green as well. So this became quite straightforward trade once you broke out of the magenta. And this one, I talked about it, isn't it? I mentioned about the retrace. Let's talk about my trade here. I took that trade. Where was it? 45, no. A little later. Yeah, a tight one, right? I protected it very, very aggressively. But it went all the way down anyway. So I talked about this. Now, if you can't get comfortable identifying the precision, this was 11:18, right? So you notice we were about to break out from the magenta. Now, before we were about to break out, 10:18 was here, right? This large red candle. You would have already seen that precision algorithm here. Do you see it? It was already clear. And identifying this blue was quite important. It cannot, well, if it's done then it may be slightly challenging to time the breakout. But if you already had the blue algorithm from the early candles, this becomes quite easy to manage. So you saw the blue starting to attempt a breakout. Now, if you're uncomfortable with this breakout here, that's fine, right? Don't be too fixated on it, because after which we had that retrace here. And you see we broke out. This green candle here broke out. And now this doesn't look scary now, but it does, when we're trading. This is a large candle too, man. This was, let's see, it's open, close. Open, it's high and low. It's one, incredible. It's a 1 point candle, right? It doesn't look big here, but this is a 1 point, including the wicks, man. This was a 1 point candle. So it's significant. This can stop you out. This can, well, potentially meddle with your trade. So I remember it was quite scary there, right? Especially if you're trading large contracts. So if you're worried about the breakout, right, some of you will catch puts here. You shouldn't be taking puts here, because this is a support from the magenta. When should you be taking puts? When we bounce off that wick here, off that blue. This is when you take puts. Or this part here, this wick here from the blue algorithm here, that you can manage your risk better. So instead of taking puts at this green, now this green candle only appeared green now, but it was completely red when it tried to break out, right? But you cannot be taking puts here on the red candle. Firstly, this is a red candle, and secondly, you're taking puts at a support. You cannot be doing that. I would rather you wait for the bounce off that blue again, so you would take puts here, and your stops can be more targeted in this blue resistance, and by then magenta as resistance as well. Or you take puts here, right at where this point is. So this point or this point instead of this candle here. You understand what I'm trying to tell you, right? Wait for the breakout and retrace. So this is a breakout, and it retraced back to show that the blue is indeed in control to want to break out of this magenta. This is also triggering stops from that magenta and pushing it all the way down. So in light structure like that, right, you don't see very clear. Well, honestly speaking, this isn't very beautiful head and shoulder pattern, right? If you were to chart the green algorithm, yes, this would be beautiful. But we were depending on the orange and the magenta. So it's a very shallow head and shoulder pattern. And this is when you have to depend on the breakout and retrace. Breakout and retrace, very important. This is a very important skill you need to learn, especially if you do not see a very clear structure and using the precision algorithm to guide the breakout. This is what I always mean, using the precision algorithm to guide your breakout and retrace. So absolutely beautiful trade here, isn't it? And we thereafter, once again, 20-day moving average here. It's the same thing, isn't it? You've studied this before. Dual algorithms. Just take a look. Magenta was in control. Penny perfect here. You see green rejecting off that 20-day moving average. And so at this point, I reminded you that the market may not have the strength to go down until we build more liquidity. This is the sign of when something gets oversold at this point. When we were selling in green, when we're selling in blue, and we started tapering in the green, you see that the sellers are losing strength, and we bounced. So you could take a zombie trade here, fair enough, to the 20-day moving average, right? A zombie here will make sense because you have the magenta. On this bounce, you could take a zombie, especially once we were no longer in that blue, right? And we broke out of that. So right here, we were oversold, and that's why we had to bounce. And when we bounced off in that green, which was very encouraging. You could still have caught the zombie trade here, right? This would still be a beautiful trade from 660 all the way to 664. This is a 4-point bounce. It's still absolute money. If you're taking something in the money, well, something in the money then would be really expensive because of the IV. But if you're taking something 0.5 delta, you still have caught $2,000, $2,000 per contract on the way up, right? Still good money here. Caught a bounce. when you understand that something is oversold here and with the magenta. So it's still a beautiful trade here if you took either on the bounce with very tight stops, you notice, right? Because there isn't any precision here. A little risky though. I wouldn't take this because I could still see blue in control. But once we had that engulfing here, right, a possible trade if I were to review this. I was watching it then. Magenta, yeah, right, bounced. We had that blue. Once we broke out of that blue with that engulfing candle, this engulfing green, engulfing this on the bounce of magenta, I would have possibly caught a zombie here if I wanted to and protected it before the retest of green and see if it bounced off that green, which it did. Beautiful trade here all the way to your 20-day moving average as your target, or your pink algorithm if you were charting it diligently here, right? So you would have protected your trade by then, right here, the pink algorithm. Zombie trade, understand, no need to call the reversal because, as I always mention, you don't see the bulls building liquidity. Now at this point, if you want to call the reversal, you have to wait for pink to build liquidity. Pink has always been the bullish control, and so wait for the 20-day moving average retest, pink to build liquidity, bounce off the 20-day. This would be an ideal situation if there is a full-fledged reversal. But otherwise, the target to 20-day moving average makes sense. The bounce off to build more liquidity makes sense. Seeing how something gets oversold makes sense, right? Understanding the algorithms and how to plan accordingly. You have a very key support, so you can plan your risks if you're taking the bounce. You know there is a clear target to the zombie, whether it's 20-day moving average or to the pink algorithm here. So you still could have caught a 4-point bounce. Now this bounce, 4 points here, isn't it? With structure, with very controlled risk, compared to this 5-point red candle based on the news. I want you to see the juxtaposition of this and, well, compare 5 points out of luck or 4 points out of skill. What's the difference? I would rather take 4 points of skill that I can replicate this every day than to depend on this, where it's once in a blue moon and have to depend on someone tweeting in order to make money. This is when you are subjecting your livelihood and your future in someone else's hands. And it only give you 5 points when I can determine my own future, and it's 4 points. It's good enough. Or even better, as I've shown you, if you focus with the magenta, you could have caught 13 points here. Even more than this news that's at most 6 points. You understand the logic behind this. So I want you to learn this skill and not be coveting on news like that, right? I'm sure this is exciting. I'm sure it is. It's great. But you cannot allow that emotion to drown off your primary purpose of why you're doing this. Now back to this. The way down became straightforward because you saw in this case, not just dual algorithms, but you see the triple algorithms right here. Now, I've covered this in previous videos, so I will not go through this too much. And you see the green selling here, guiding you on the way down. So this was straightforward. This was a very classic head and shoulder pattern right there with the dual algorithm setup. In this case, we have the green, the orange, and the magenta. So if you went long here, you have to cut it when it no longer is in green, right? Because firstly, this is a zombie trade. You're not expecting it to go up. You're expecting it to go up only once in the strongest algorithm because the bears may take over control, and you see the bears taking over control in the stronger control algorithms here in that orange and magenta. And technically speaking, well, this is a larger head and shoulder pattern because we had that breakout and retrace. And once again, see for yourself, magenta and orange controlling the liquidity. Once again, it's the exact same structure here once more on the way down. Now remember, absolutely no reason to be calling for the reversal here, isn't it? Especially when we are already below 20-day moving average. Now the liquidity is here, so the market truly want to grab liquidity. This will be it. From the pink here, grabbing the liquidity here, but I need a breakout, breaking out of this magenta. So if the market breaks out of this magenta here, build more liquidity and show me strength in that green buying, yeah, maybe I would take the reversal here. But otherwise, wait for cups close is always best, because you have the main magenta algorithm here as well, right? So this would be more ideal, especially if we bounce off that magenta and that pink. So you see, you have to, in your mind, prepare for possible scenarios. So you're always prepared. You cannot just be preparing for one scenario. You need to have multiple scenarios so you can be able to ascertain what can happen and what cannot. So you're always prepared. So in this case, I know when to go long. So if it doesn't happen, I don't go long. So you cannot, you have to be very careful. Some of you are, well, damaged by signal services. You only can see one direction. And because of that, you stop planning how this may head up, and you don't learn. And so you cannot tell when this can go up, because if this doesn't happen, I know it's heading down because I understand the magenta here, right? So that's quite straightforward. You understand this, and we went all the way down. So several lessons here for today, which I want to focus for the entire week. And that is firstly your psychology, right? Even if you missed the news at 6 points, if you mastered up your focus, you could have still caught very good 13 points here. Or as I mentioned, if it wants to bounce up, you are also ready for monster trades if it wants to bounce up, right? And you are prepared for that because you understand the technical aspects of preparing for that trade. And secondly, you understood how to be looking out for some very key techniques, even for days when it is heavily selling and you just cannot, well, some of you just cannot follow the trend. You have this thing in your mind that you have to be counterintuitive. You have this thing in your mind that you have to do the reverse of what people are doing. Right? There's some of us that are like that. I've shown you that even a zombie trade here, right? If you caught this trade here, and I've shown you with technical understanding how this trade can be caught, it's still 4 points. You're still going to make more than enough money than most people, right? So it's important. Learn to find profits in the chart. And I've shown you throughout the entire day's analysis. So do run through them, right? They're all time-stamped. And a big part of that is also understanding the macro structure. Or prepared for the day. So you don't just come on the trading floor and just try to read the charts to make money. You notice I do this every day. You have to be preparing for the macro structure, understanding where the 30-minute moves are, because I talked about that early in the day as well. So you must always be prepared, right? Always surprise yourself so that you know where the main liquidity levels are in the 30-minute, how to translate them in the 1 minute. And the 1 minute is when the action happens. You know when to be putting in your trades on the 1 minute chart as well, whether on the micro level or macro level. And you see, even the micro level, I could have made my $10,000 here, just here like that, right? We can do this every day. Turns out I stopped trading. I think here I missed the second half of the day, which is fine, right? Because just this move here made over 40. I think, yeah, 40 here, right? Yeah, with only $7,000. So you can find profits in the charts every single day. We can do this every day. This is why we learn this skill. So please, please do not be coveting over the big moves. I know after this, the market will go crazy. in terms of trying to catch moves, trying to time the bounce or whatever it is. But if you stay focused on the charts, well, it's less than a 3% red day, so you just have to be very careful, right? When this happens, you are ready, you're prepared, because every single day you improve your skills. And this video just reminds you that the main thing is improving your skills, not trying to catch the larger moves. You realize that, right? So try to focus on improving your skills and finding profits in the charts. You can do that every single day for the rest of your life. Thank you very much for watching.